Good morning, traders. It looks like the markets are given a little bit of a respite after the massive end of day, all day and end of day rally yesterday. It looks like they're coming back into a little bit more value, volume value, because the last hour we had a nice little uptick in the markets, and it's coming back in a little bit. Despite you had Trump out over last yesterday evening talking about putting tariffs on everything in China, which I'm in the camp to think that that's going to happen. I think that all of this is going to this G20 summit in Australia is just going to be it's all farter. There's not going to be any type of agreement for quite some time. Um, the president of China does not seem to want to bend in one uh, bend at all in the least to put this behind us. So, uh, very tricky situation. Okay. Uh, so, some things I'm seeing this morning. It's in the headlines. We do have Workday. Uh, the earnings are coming out this week. Uh, so, keep that in mind. You got your Workday. You got your Salesforce. It's active this morning. Its earnings are out this week. There's news out on Google. It's catching some volume this morning. There's more Europe, European Union on privacy concerns, trying to put more fines against Google. United Technologies, they came out yesterday evening and announced they're going to break the company up into three separate companies. That typically is a bullish setup for a company to get broke up into independent parts because the value of the whole is greater if it's broken up in smaller segments. That's generally the case. So we're probably going to see a responsive bid in United Technologies. Seadrill came out this morning, and right now they're ticking up. They did miss on the revenues and earnings, and they were already making a loss. And considering the uh, negative tone in sentiment right now, this is probably one that's probably going to fade the pop this morning. So be careful trying to chase this to the upside. Amazon came out with really impressive numbers. I did notice in the headlines here some things that uh, way up on their advertising revenues, the instant ads to their customers and stuff. They had some very good responses, and this was the best holiday shopping record, 5 day holiday shopping record in their history. I think a lot of it dealt with they gave the free shipping to everybody, so it was no big surprise that it was going to be a huge year for Amazon with that free shipping to everyone, including their Prime members. And then the other big news was Tesla and China. And um, if you guys don't remember, China went and put tariffs against Tesla selling their cars in China. So we heard a couple weeks ago that they were cutting prices in China. Well, the data came out this morning that very bad sales, very bad sales in China. They sold like 220 cars for the whole month of October in China, and considering the size of their population, that is horrible. Um, says that the China sales fell 70% in October compared to last year. You know, these are numbers that are devastating for Tesla. So keep that in mind. I've already got Tesla puts, and it's trading down really good this morning. And I think it's going to continue to fall because it is completely and totally overvalued. Uh, First of all, the Elon Musk interview, people didn't seem to react to it yesterday, but him talking about the company was only weeks away from, in his own words, going under, going bankrupt, or giving the illusion that the company was about ready to fail. And by his own words, which actually he was just going to go back and borrow more money. But my point is, he was only a few weeks away uh, coming into this quarter's earnings from having to get more financing to keep the company afloat. And then you see a 70% drop in sales in China. Okay. Okay. I was going to also talk about the skew. Typically, you can use your skew. It's a measure of the out of money options on the S&P 500, SPX. And basically, during times of extreme bullishness, you get to one extreme. And we just came off the highest readings in history on the skew in the S&P 500 back in July and August, uh, suggesting that the out of money calls were getting were really being sold big time at the market highs. And what it was, the uh, long term investors got they were they were selling the out of money calls, taking in that premium at these high levels. The option sellers, and basically what it came down to, implied volatilities at these record highs on the uh, call options. They completely flattened out, and then eventually the markets just rolled right over and crashed. And this is the biggest drop ever in market history for the skew off of those record highs. And look at how fast it's happened. Okay. Now we're on the opposite end with the puts. And I'm not saying that the market bottom isn't in. I still think that the market's going to go a little bit lower. But my point is, based on skew, and there is time. This is the time here to start shopping for some call positions in the market, because what we're seeing is down here at these levels, we're starting to see a flattening out of the implied volatilities on the out of the money options. And to give you an idea here, what I'm talking about, see here, let me pull my shut this down. Trade. And if you go SPX, I can get it to load. Okay. And if you go on to your December monthlies here, okay, show all. And if you look here, you can tell basically what we're seeing here, not volume, implied volatility. Basically, what we're seeing is a flattening. If you come over here, you go out about, it's 26.75, you go back down to 25.75. You're getting a flattening yield, implied volatility versus the in the money options. This is flattening out. It's like a flattening yield curve. And at these extremes right here, right now, the spreads have dramatically decreased. So that means that there's going to be far fewer people selling the out of the money puts at these levels, and they're actually going to start loading to the other side in theory. That doesn't necessarily mean that's going to happen anytime soon, but pushing your puts out of the money puts at this point is a little foolish. Okay. And then if you also look at your VXX, okay, and you go back to your daily. Okay, let me spread this out here. Okay, and what we've got going on here, we're putting in a lower high on our VIX, even though we're putting in a double, we're right here near a double bottom in the markets. We had a divergence happen in the VIX. And this primary uptrend is starting to look in jeopardy, and the volume flow indicator is starting to roll over a little bit here. suggesting that we do have less put buying in the markets at these levels, and that's about 3 months out on the VXX. The VIX is 30 days out, and you can see that this one here on the trend uh, is even a little less stronger. Now the VIX doesn't have volume, so you don't the volume flow indicator doesn't work. But we're on right on the precipice of a possible trend change in our volatility indexes. So I would strongly suggest uh, tightening up on your out of the money puts, and at the very least, if you want to stay in puts, go in the money and actually start shopping for call positions. Well, that's all I've got to say, and we'll see how this market goes. And also, one thing I want to also point out here, we do have the FOMC coming out this week and announcing some stuff, possibly a little bit more dovish on the interest rates since we've come back in so far. And I think mostly the market's expecting that. And if that's the case, if they are a little bit more dovish, the big move we had up was overnight yesterday before we came in. I mean, we were up 250 points on the Dow, and most of yesterday's gains came from Europe. Okay, so if he is a little more hawkish, that's going to continue to press this dollar higher. And considering the numbers coming out on retail and stuff from Black Friday and Cyber Monday, I'm leaning to think that he's going to continue his stance on hawkish rhetoric. So this is how the foreign investors were buying in right here, thinking the dollar is going to continue to go higher because they get paid if the dollar goes higher and the markets actually, because the markets have already reset on the skew indicators, they're thinking that we're going to get a higher dollar, and the markets are going to catch a bid, even if Powell is more hawkish in his rhetoric. So that's kind of by having the big pop yesterday. That's kind of what I'm reading into what's happening with the FOMC tomorrow. Okay, so good trading, and I will try to see you tomorrow.